Section 12 of the Integrated Goods and Services Tax Act. Section 12 of the Integrated Goods and Services Tax Act, IGST, provides a framework to determine the place of supply of services in cases where both the supplier and recipient of the service are located within India. Understanding these rules is crucial for accurate tax compliance and GST implementation. In this guide, we break down the section in a structured manner, covering general provisions, specific cases, and their implications. Tax professionals can leverage this detailed explanation to navigate complexities and ensure compliance in various service scenarios. This section applies only when both the supplier and recipient of the service are based within India. It provides location-specific rules to determine which state or region should rightly levy GST, defining a clear path to maintain consistency in tax application. Subsection 2 sets the groundwork for determining the place of supply. For registered recipients, the place of supply is the recipient's registered address. For unregistered recipients, if the recipient's address is available, the supply location shifts to the recipient's location. Otherwise, it defaults to the supplier's location. This differentiation ensures transparency in determining accountability while accommodating varying customer types. Services connected to immovable property, such as architecture, real estate construction, and lodging, are taxed based on the property's location. If the property lies outside India, the place of supply defaults to the recipient's location within India. Multi-state properties, the service is apportioned across states, based on the value derived in each respective state. This subsection ensures that immovable property services have region-specific accountability, vital for businesses in real estate and related industries. The rule is simple here: the place of supply is where the service is physically performed. Whether it's a restaurant meal or a salon appointment, location specificity plays a direct role in GST determination. For registered recipients, the location of the service recipient applies. For unregistered recipients, the place of supply is where the training activities are carried out. This regulation highlights the need for trainers and educators to adapt reporting processes based on client registration status, ensuring proper tax filing. For cultural, sporting, or similar events, tickets or entry services are taxed at the venue's location. In cases where an organizer supplies event-related services. For unregistered recipients, the service location aligns with the physical venue. For registered recipients, the location is based on the address of the registered person. Registered recipient, place of supply is the recipient's location. Unregistered recipient, the place of supply defaults to the handover point of the goods. This differentiation ensures that logistical services like freight remain compliant by categorizing transportation transactions effectively. Whether for registered or unregistered customers, passenger transportation services base the place of supply on the embarkation point, where the journey begins. For services provided on a moving conveyance, such as flights, trains, or cruises, the place of supply is the conveyance's first point of departure. Telecom services determine the place of supply as follows. For fixed line services, based on the location of installation. For mobile or internet services, based on the recipient's billing address. This nuanced approach ensures proper taxation for both residential and business clientele. Banking and financial services determine the place of supply based on where the client's information is documented in the supplier's system. For registered recipients, the place of supply is their registered address. For unregistered recipients, the place defaults to the recipient's usual location. Quick adaptability to these distinctions is vital for insurance companies to report properly. For advertisements supplied to government bodies across multiple states, the service is allocated in ratios based on value derived from specific states. This allocative method ensures equitable revenue sharing among states where services are delivered. Section 12 clearly demarcates the place of supply for various scenarios, aiding tax professionals in simplifying tax calculations and ensuring accurate GST filings. Highlights include differentiation between registered and unregistered recipients. Property-based provisions for immovable assets. State-wise allocation for shared services like advertising allows tax professionals to minimize compliance risks and ensure accurate tax payments. Mastering Section 12 strengthens GST reporting and enhances client trust in tax services. This guide equips tax practitioners to address complexities in determining GST place of supply, fostering compliance and clarity in service taxation.